you are having a great week. I'm sorry if I sound a little scratchy. I think I've got allergies right now. All the trees are in bloom and I am incredibly stuffy and everything like that. But back to trading. Here we go. So we've got my Twitter page up. If you don't follow me already, definitely check it out. I've got the Modern Trader Summit, which is going to be streaming. There's 12 days left, guys. This is all about you and creating content for you to learn from and profit and get better. So if you click here, there's a discount code right here, and it'll take you right on over to the Modern Trader Summit page where you can book it. I was also interviewed by Christoph Lewis, where he's doing a web channel or YouTube channel about conversations with people that bring positivity to their lives. So definitely check it out. It's going to be released on Monday at 1 o'clock. And also at 1 is also going to be the crowd forecast of the SPY, which is going to be very, very interesting this week because it is going to be a week where we talk about G7, and we're also talking about the FOMC meeting. I believe it's on the 12th. So there should be probably some big reactions to the SPY this week, which will bring me into the analysis of the SPY. So I've got it here, or S&P 500. The SPY is the ETF for the S&P 500. And as always, guys, you know, I am not a licensed professional. I did have my Series 7, but this is all my own personal opinion. So please do your own due diligence and please trade accordingly, as there's always risk in trading, and you have to manage that risk properly. So here we go. We've got the SPY. I do have it on a weekly chart. So you can see this is back in January, and we did hit the new high, and then it pulled back, ran up. It did hit this trend line right here, which you can see is on the weekly chart, and it bounced once and then twice. And then it pulled back again to this lower trend line, and it's been holding that pretty consistently. This is just the upper portion of that trend line, which it looks like, you know, we've got a little ascending wedge here. It did go ahead and break out above this downward trend last week, well, the end of end of May. And then it's continuing up holding that trend. If we go ahead and we pull it back to a daily chart, you'll see it's been pretty much holding this trend line here for the upper portion of that wedge in the past couple of days. So, you know, I think we might see a test up of 278.90 area, and then a potential pullback down to this level down here, depending on how the G7, you know, how Trump's speaking at the G7 is taken, which we will probably see by the futures market opening up at 6 p.m. today. We'll see how that reaction is taken, and that'll probably indicate how it's going to open on Monday morning, as well as how the Japanese and Asian markets do open up later tonight around 8 or 9 o'clock. You know, you can go to CNN Money and you can see exactly how those reactions are being taken by the world. Again, the FOMC meeting, which we are seeing that the market is looking like it's great. We had great industry numbers as far as employment. So the market reacted beautifully over the past week, has been very bullish, broke out of this wedge right here, and it's continuing upwards. So we'll see if the FOMC, where they're saying, oh, the economy's doing well, the employment numbers are lower than they've ever been, and that means that inflation is going up. So we're going to go ahead and we're going to increase the rates to go ahead and slow down this growth of the economy so it doesn't go too out of control. So I think this week, I think we will eventually see a pullback somewhat on the SPY. I don't think that's going to break the 280 level this week. I think we're going to pull back, but it might just pull back down around here to 275. It could pull back as far as 271. So if you are looking for a longer term entry, I would say try to follow this trend line here. If I back it out, you can see, you know, anything along here in your daily chart, I would look for entries around there if it does break this trend line right here. Okay, going into the long watch list for the week. Oh, excuse me, I don't know why I went there. We have DDS, Dillard's, which does have 10.7 million in the float and 45.83% short float volume on Friday. You can see it has been breaking out. It hit a new 52-week high on Friday. So many times I do like to follow these stocks because as they break out, which you can see it broke out here and it was hitting new highs, it held, broke up a little bit higher, broke up a little bit higher, and the fact that we still have a fairly high short float volume, it could continue up or it could continue down. So definitely keep it on watch. We have 93.70 for support, 94.46. If we look back at the yearly chart, as I was saying, it did break out. 5-year chart, it does look like it could go back over here, maybe up to 97 before we have a pullback, because the one little candlestick here, 95.75. So maybe another $1.50 before it might test a resistance and then pull back. Next one on the list is SeaWorld Entertainment. SeaWorld Entertainment has 51.9 million in the float. It was 57.64% short float volume on Friday. I do have a support level of 20.65 and resistance of 21.18. And when we pull it back to our yearly chart, you can see again, this was breaking out for the year. So it's broken out. And on our 5-year chart, it looks like our resistance is going to be around 21.85. After that, we've got up to 22.71. So if it does break this 21.85 level first, and then up to 22, let's say, what did I say, 22.90 level, right here, 22.68. If it does break that level right there, it looks like it's got a big gap to fill up here to 26.76. So definitely keep it on watch. There's no guarantees, as the market will decide. However, it does have a pretty high short float volume, and it could potentially move up. The RSI is showing that it might have a pullback before it has that surge, so keep it on watch for those levels. Next on our list is TDOC, Teladoc. Now this one, it does look like it broke out and then it pulled back some and surged up, and then it's in an upward trend overall here. So I would put support of 53.30 and then the first resistance of 53.85, 54.30, and then it does have some levels it looks like it could be testing, 54.80, and then on up to the high of the year of 55.80. It does have 49 million in the float and 53.8% short float volume on Friday. So keep it on watch. And the year, you can see it's breaking out over the past week, and same thing for the 5-year. It did pull back though, but it's still in this upward trend. So it, I would say as long as it's holding this trend line here, that it would be in the upward trajectory, but it could pull back this week to the 52 level before it would continue on up. And then if it broke that 52 level, looking at it more on a longer term swing trade versus a day trade, for the day trades, I would be watching those levels right there. Next one on our list for longs would be Stitch Fix, SFIX. I would look for support right here around 24 and then resistance of 25.38. It does have 9.17 million in the float and 39.62% short float volume on Friday. It did not break out, so this one just had a big surge, and it does look like it could go up and test the level of 25.78, and then further up after that, 26. If it were to break 26, I think we could see more upside potential, potentially up to 27, and then after that, test up here to 28, and if it were to surge even further, break out above on that daily chart. If we pull it back to the 5-year overall, let's see, yeah, 5-year, it had its IPO back in 2017, so it doesn't have that much history, but it does look like it could potentially break out because it is lower float if it does have that volume behind it. Next one on our list is RH, formerly known as Restoration Hardware, and this one did have massive surge after hours on Friday. So I would put a support of that 13.49 level and then 14.52, the high of the post-market activity. If we go to our 1 year, now this one had seen that it had tragic drop back here. It was all the way down to $24 back in February of 2017. It found a double bottom. Then it just broke out recently this year at 105. This is our 5-year chart. So this is a weekly chart, and it has been breaking out and holding ever since. So it does have 16.02 million in the float, 48.86% short float volume. Could surge up further on Monday morning because it did have that post market activity. So definitely keep it on watch. Sorry guys, low battery. We'll go ahead to our short list. We have CUK, Carnival. We have CUK and I believe it's CCL. Not CCL, not triple CL. So they both hit new 52-week lows and they have been trading in that range. I would say keep CUK on watch as well for a support level of 61.14. After that, 60.85. If it breaks above 61.58, I would look at it potentially for a long breakout, as long as it would break the resistance level of 62.75. It could fill this gap to the upward side up to 63.98. But I am more short biased on it now. It does have 181 million in the float. Next on our short list, this is a lower float stock, so definitely keep it on watch. Oh, let me get rid of these fibs here. And I would say look for a resistance, a support level of 25.02. I didn't draw the resistance line, which we'll do right now. I would say do a resistance line up here at 26.66. So support of 25.02, actually I had 27.15 written down in my notes. So 27.15 right here for resistance for breakout. As you can see, it did have big parabolic move to the upside, and it looks like it's in that downward trajectory with a lower float. So it could pull back a fair amount, as it did run up to 40, and now it's already come back down to 25. We might see a little bounce and then further drop to it. Next one on the list is 9. So I would say a support of 28.91 and a resistance of 29.86. When we go to our 1 year chart, you can see it's right in the mid-range, but it's coming back. It looks like it's got potentially to test this support around right here, which had held support in the past. If it does break below it, I would say I think it can go down to 26.45. After that, test on down to this level down here of 24.50, and then all the way down. Third potential full profit of 22.75. After that level, watch out below, down to the 50-day moving average of 14.80. But that's highly subjective. This does have 23.36 million in the float. And next one, we have a higher priced one, MKSI. So we'll go to our 15-minute chart. I would say a support of 101.15, resistance of 103.5. This one has had a nice run to it. Sorry, I went to the weekly. So this is our daily chart. It does look like it's coming down to potential support level. If it does break down, it looks like it might have bounced. We have our 50-day moving average here of 103.50. So if it does, it could run up from there, or it could break down further from there. So definitely keep it on watch. It does have 53.5 million in the float. And the last one for our short list is Pump. Pump does have 51.06 million, and it did run up recently, and now it's on a downward trend. 13.98 for support and 14.50 for resistance. When we look at our 1 year chart, you can see ran up, pulled back, ran up, pulled back, and if it does break down here, it is in the oil and gas sector, which has been saying, they've been projecting that we are going to have more of a pullback this year and potentially next year as well. So all of the oil sector in general, just like it was running up and it was surging just a couple weeks ago, now we're all seeing the whole sector in general pulling back. You know, if you guys trade ETFs, especially triple velocity, you've got Gush and Drip. So potentially Drip would be one to trade at this time, because it could be pulling back as well on the price overall for Brent crude, which would, in essence, Drip would be the short version, so that would be going up. For longer term swings, I would say look at Philip Morris. That one is a potential longer term swing. You can ignore these lines here, but I would say a support of 76, or a a support or stop level of 76, but it has had a downward trend overall, and it looks like it's been bouncing up the past 2 days. So I would keep that on watch. If it does break out here, it could slowly surge upwards, and you've got potentially, let's see, 123 was the high of the year, so you've got roughly $50 to the upside potentially. We also have Manpower. Manpower, I would say a stop level of 90. They just had a dividend, it dropped down, and I would say 90 is a stop. It could surge on up. I would say the first level of potential profit for profit taking would maybe be around the 105 area, or if it broke out here above 100. But keep that one on watch too. PZZA, Papa John's. I would also look at this, let's remove that it has been holding this trend line right here. So I would put a $50 stop on it, and it could continue on up. We've had 82 is the high of the year, so we've got roughly $30 to the upside with $2 potential to the downside. So pretty good potential long-term return there. And X-Ray as well, dental supply company. So I would look at X-Ray and I would put a stop of 41.50 here. So just below the 52-week low. It did bounce up on after earnings and pulled back a little bit, bounced up. It could pull back a little bit further, but it could also surge up. So keep it on watch, guys. As always, carpe profit, seize those profits one day at a time. Do not miss your chance to sign up for the Modern Trader Summit streaming. It's available online and on demand after the event. The price will be going up after the event for the on-demand version, so definitely register today. I want to see you guys there, active, online, and in person. Have a great week ahead.